Now the recommended trades, as usual, I kept the buy limit order near that of the low 1.1081 and 1.1145. They could gain about 40-45 pips above that of the initial high to start with, and then keep the hedge order to limit the risk 1.1050. They could make a small swing during the gap time or during the European session, and then try to induce the traders to liquidate the long if they have taken the long position as a breakout trade, and then start gaining the levels. So now at that time you can take a buy. Always take a buy near the low with the hedge order. You will be able to come out of that position with the profit on the same day. If you take the buy near that of the high, afterwards they made a big drop, then it might be difficult to close the position on the same day, but next day you will be able to close it. So if you use the hedge order to limit the risk, you'll be able to really handle the position on either way moves of the market and capture the profit. Then in the case of GBP 1.3069, just one pip above the initial high, I kept the buy limit order with 1.3145 as the exit and 1.3035 as the hedge order to limit the risk. In the case of yen, 101.87, one pip above the initial high, I kept the buy limit order with 102.55 as the exit and 101.40 as the hedge order to limit the risk. So anywhere if you have taken the position, then afterwards the position consistently make profit for more than 30 minutes and go above, the market goes above that of the entry level and show profit for more than 30 minutes, you can keep stop at entry in the buy positions. Then later on, you can see that they continue to gain and you can take away the exit order or the take profit order above and make the stop at the entry as a trailing stop. So the trailing stop will be coming on the lower level of the market. Below that of the market, the trailing stop will go, and above that of the market, the take profit order will run on the upside. So as both of them run upside, as the market goes up, and they will not be filled. Suddenly, if the players reverse the market and drop, then your stop will be filled. Suddenly, if they make a big jump, then your the take profit order will be filled. Then what will happen? Whenever they make a quick move, they will reverse it very fast. So that you will be able to exit at the highest level, almost close to that of the highest level with a profit, with a maximum profit. So that way you will be able to really maximize the profit also. So follow the trading strategy. You'll be able to really find that trading is a child's play, and you can easily systematically do that without any difficulty, and there is no need of making any complicated study whether the market will go up or come down and things like that. And you can easily understand either in the hedging or in the buy position, you will be able to make profit. And later on, the other side will also make the profit. If you want to improve the trading strategy, then you can go in for an averaging after a drop of 150 pips or 200 pips. Take another position and close both the buys above their average so that you will be able to exit out of the positions during the bounce back of the market. So always keep in mind, irrespective of the market condition, whether the market is making one-sided drop or one-sided rise for some time, you can still use the hedge order to limit the risk and maximize the profit by doing either way trades. And this is applicable only to that of Euro and GBP. But in the case of other denominator currencies and also in crosses, they do the one-sided move for a prolonged period for about a week or 10 days or sometimes 14 days, etc. In such a situation, it is not advisable to go in for straight use the hedge and book profit on the hedge or book profit on the buy side. In the case if it is hedged, then you have to keep stop at entry in the hedge and take another sell and book profit. And this hedged position will remain as such. The other sell position, if it makes, say, for example, 150 pips profit, you can close the original position with 30-40 pips loss so that net profit will be 70 pips. That way, you can improvise the trading strategy, and then you will find that irrespective of the market condition, you are in a position to earn money